Thanks for joining us. You've tuned in to Arirang's Within the Frame. I'm Han Da-eun in Seoul. Hopes are rising here in Korea that a long-awaited interest rate cut may be coming soon. Bank of Korea Governor Rhee Chang-yong, for the first time since tightening policy began years ago, hinted at a potential policy pivot, noting progress in controlling inflation. But Korea's household debt continues to soar, growing at a rapid pace, with foreign exchange market volatility adding to the concerns. Meanwhile, next year's minimum hourly wage has finally been set after months of intense tug-of-war, but at a level that disappointed both businesses and workers. For expert insights on these major economic developments and more, Yang Hee-dong, Professor of Business Administration at Ewha Womans University, now joins us via Skype. Thank you so much for joining us.
Hi, good evening. Thanks for inviting me.
All right, let's start off with the Bank of Korea's latest stance. It has kept its key interest rate steady for the 12th consecutive time. Are conditions still not ripe to begin cutting rates?
Well, just yesterday, the Monetary Policy Board declared that they want to keep the same basic interest rate to 3.5%, which remains flat for the past 12 months. But this is the longest duration to keep our base interest rate stable. And the key problem with this interest rate is now we have come to the biggest margin between the United States and the Korean base interest rate by 1.5 percentage point. And if you ask me whether the conditions are ripe for the interest rate cut, I should say there exist both favorable and unfavorable conditions to this interest rate cut. The favorable condition is now in Korean domestic market, consumer market. The inflation seems being controlled pretty well. Consumer price index for the past 3 months remains almost 2.4% level compared to last year. So 2.9%. In April at 2.7, in May now 2.4, in June. And there are many different kinds of price index. If you focus on core price index, that exclude the groceries and energy cost, it has been pretty volatile for a while. Now the core price index remains 2.2. And living cost index that consists of the frequently purchased items remains about 2.8. So regardless of all these different kinds of price index, now you can tell that the price index has been pretty stable around a 2% level. And that's a favorable condition to an interest rate cut. But still, we should be aware that there exist unfavorable conditions to interest rate. The first one is exchange rate between the United States and Korea. And second one is the abruptly increased the household debt. And number one is risk movement regarding towards the real estate price in the increases. So those are three major hurdles that may deter the base interest cut in Korean domestic market.
The Korean media likened the Bank of Korea chief's remarks as turning on the blinkers on the road before making a turn. So it looks like we are now closer to a rate cut than ever before. But as you mentioned, there are remaining risks, such as the rate differential with the U.S. and soaring household debt. So we'll have to keep close tabs on how things unfold. Professor Yang,
right.
Considerable attention was also focused on whether some of the board members had different opinions, as each of their stance is important to markets looking for some clues as to when the rate cut may begin. Was the rate freeze agreed upon unanimously?
Yes. Well, there was suspicion even some days before the Monetary Policy Board, the meeting, there's suspicion from the media that there will be different opinions that may propose to decrease the base interest rate. But yesterday, I mean, when we had the Monetary Policy Board, there was unanimous decision to keep this base interest rate to 3.5. Well, the major reason again, I mean, all these members had very significant concerns about three major the unfavorable conditions to basic price interest cut. The first one, again, the exchange rate and abruptly increased household debt and recent movement towards the real estate price increases. So these are the major, forces that has deterred the different opinions to reduce base interest rate. Besides, the president of the BOK, Rhee Chang-yong, had a very significant, serious, interview with the press that he has no intention to decrease base interest rate, and he's very aware there's strong demand from the market in favor of base interest cut. But he declared that he has no intention to decrease or reduce a base price increase for a while. And so that's period. And I'm pretty sure that the Rhee Chang-yong had tried to persuade all the members of Monetary Policy Board to remain very calm about the recent drivers to decrease base interest rate.
Now, to offer another perspective on the topic, Professor Kim Hwa-gyun at Texas A&M University's Mays Business School also joins us. Thank you so much for joining us, Professor Kim. We've been waiting for you.
Thank you. Thank you so much.
All right. We were talking with Professor Yang about the Bank of Korea's rate freeze and the remaining risks ahead. And one of the risks that Governor Rhee Chang-yong has mentioned that could further delay the rate cut is Korea's soaring household debt. Korea's household debt soared by over 20 trillion won in the first half of this year, rising at a pace that was 5 times faster than last year. How do you see this, and would it actually further delay rate cuts?
I think there's some possibility based on what the Governor Lee actually talked about, but at the same time, there are some other issues to worry about in this case. So on one hand, I think the delayed rate cut actually is possibly, because of this, debt burden increasing, and when the debt increase actually further as the interest rate goes down, then clearly that's going to just to make the debt problem even further. So in finance, I think we use this term like debt overhang problem. So if it's already written with lots of debt, if the amount of debt is increasing further, then the extra investment and other more valuable things can be completely given up in terms of the investment opportunities. So I think that's going to be one concern. Of course, at the same time, if the debt amount is increasing, then clearly we have some issue in terms of the consumer defaults actually increasing. So that's going to be the worry. Another the related effects is inflation concern also. After all, the monetary policy is about controlling for the inflation rate. So if somehow the debt increase further, and if this actually is causing the consumer investment activities actually increase for somehow, right, then I think that's going to just completely just ruin the incentives for the government, the Bank of Korea to control for the interest rate. So in that regard, that's going to be the issues actually that influence the Bank of Korea's decisions. On the other hand, the financial stability focus exists as well, in that if the Bank of Korea doesn't decrease the interest rate soon enough, then maybe that's possible that some of the marginal households with lots of debt actually may just file for bankruptcy. So clearly there's some trade-off. By just lowering the interest rate, maybe you can help some of these, the debt holders with, the varying interest rate actually, then in that case, they can get help. So for that reason, I think lowering interest rate is going to be helpful. So you have to just take a look at this and monitor which one's more important at this stage, the financial stability versus the inflation slash the further increasing debt burden, and then that leading to the overburdened debt.
And Dr. Kim, Fed Chair Jerome Powell also made some similar remarks. He signaled that rate cuts may be coming soon. He suggested that the case for interest rate cuts is becoming stronger, saying the job market has cooled. What exactly is happening in the U.S. job market, and would Fed rate cuts begin earlier than expected?
Well, the U.S. labor market has been really good. And that actually just increased some worries. I mean, it's a good thing, but for some reason, if the labor market is just too strong, then that's actually is going to also increase inflation coming out of this, the labor market, because the wage increases, et cetera. Because labor market demand is high, then the rate is going to increase. that can increase the inflation. So that was always some concerns. It's a good thing, but it's a concern. But finally, it has cooled down a bit. Whether this is going to be some cyclical reasons and just the temporary ones, the Mr. Powell is still somewhat, hesitant to fully, be convinced. But still, this, it was good news in terms of inflation control. So in that regard, if this pattern continues in the labor market is not too hot, then there's a chance that the Fed rate cut can be somewhat earlier than we expected. Actually, it's somewhat close to the original estimates, around the August to the September, October, the season that you will see the first cut. But there's some possibility increase right now.
And back here in Korea, Professor Yang, after weeks of fierce debates between the management and the worker side, Korea's minimum hourly wage for next year was set at 10,031, or roughly $7.30. That's up 1.7% from this year. Now, while small business owners say it'll substantially increase their financial burden, potentially jeopardizing their businesses, laborers argue the raise is not enough to reflect high inflation. What's your take?
Well, first of all, we need to understand. I mean, the minimum wage commission (MWC) consists of 3 different representatives: laborers and employers and public sectors, and 9 members equally participate in this meeting. And the problem within this meeting was now the representatives of the laborers, particularly the Democratic Labor Union, did not attend this meeting, because they weren't really happy with the representative ranges for the minimum wage increase proposed by public sector representative between 1.4% to 4.4%. Because even though they agreed to increase only 1.7%, which is second lowest level since 1988, the average, the increase rate of the minimum wage was about 9%. Right, between 1988 and even the last year. So they declare that this 1.7 increase rate is even far lower than the average growth rate. And besides, as I already explained, the inflation rate in Korean market has remained around 2% this year and about over 3% last year. So they declare that actually they have decreased their the payment by these decisions by MWC. So that is a major argument from the laborers' perspective and the standpoint. So my perspective is, well, I can understand their argument in considering of the interest rate and the average interest rate of the minimum wage. But as I already said, we are struggling very seriously with the inflation threat. And there is a very significant threat from geopolitics, such as the potential battle and the conflict between the United States and China. So there is a huge reshoring investment towards the United States, which may make a bad impact over the inflow investment from overseas to a Korean market. So, considering all these aspects, I think it may be too tough to increase minimum wages too high above this level 1.7. So I may think that this decision is pretty much reasonable and it makes sense in my perspective.
Now, applying different minimum wages by industries has long been a point of contention, but there were no agreements on that. Now, while some economists say it's time for Korea to introduce the system to offer greater flexibility, what are your thoughts?
Well, actually, the July 2nd, this MWC had declared that they are not going to accept a differential application of minimum wage rate to different industries. This is actually second decision, from last year. Well, why we should think about the differential or flexible application of a minimum rate? Because lots of restaurants, even tax the companies and CVs, convenience stores, they run their business in very, very poor and very, very minimal levels of investment. So they insist, the owners of those restaurants and tax companies and convenience stores insist they should be allowed to pay far lower minimum wages to their employees. So, there is a very interesting report in the market survey from KFMA representing the micro enterprises, and over 98% of the micro enterprise owners favor decrease or the remaining the minimum rate levels. So considering all this one, I should say that it's about right time to apply very flexible minimum wage rate according to the different industries.
Professor Kim, currency rates was one of BOK Governor Rhee Chang-yong's key considerations in rate setting. The Korean won continues to slide against the dollar, weakening past the 1,400 threshold in recent days. Is the strong dollar trend the main factor dragging down the value of local currency?
I think so. So clearly, the interest rate differential is about like 3%, 2 to 3% range. In the U.S., actually higher interest rate, right? So clearly, the higher interest rate, according to just basic economics, the money is going to be flowing from the low interest countries to high interest countries. And also, when the interest rate is high, in the short term, the stock market is typically just doing poorly. But at the end of the day, because to match the level of returns, the stock returns actually tend to go up. So clearly, the U.S. stock market is doing much better. So given that like lots of investors in Korea nowadays invest in the U.S. market, that also, even if it's small, that I think also somehow, just affect this type of the interest rate of affecting the exchange rates. So overall, as the U.S. interest rate is going down over time, I think some of the issues will go away. But at the end of the day, I think if the BOK is going to slowing down the interest rate, just lowering a bit, as we talked about in the earlier questions, I think the exchange rate differential is going to just somehow just somewhat just moderate it. At the same time, also the commodity prices has been high. So as country which imports a lot of raw materials actually before selling to the other countries, this is going to have some major effects on the producers, the price index, which in turn affects the consumer price index, and also the income is going to be affected. So overall, these two factors always just, really determine the Korean's exchange rate together with the country risk. And as we know, the country risk is not that, at this stage because of North Korean problems, etc. So it's going to take a while, but like you said, I think the interest rate differential between the U.S. and Korean economy, I think, is the biggest factor, I think, and it's going to resolve over time.
Professor Yang, Samsung Electronics' first ever general strike is threatening Korea's chip recovery. The company's largest union has launched an indefinite strike demanding higher pay. Would it have an actual impact on Korea's chip sector that's now on a solid track for recovery?
Well, the Bloomberg has expressed a very great concern over this strike because Samsung Electronics is taking up about 20% in the DRAM, about 40% in NAND flash. The semiconductor industry has struggled a lot due to the lack of production and the very serious tension between the United States and China. So this is about right time to turn over, recover the recent, sluggish performance in semiconductor the industry. But at this right time, there is a strike from the Samsung Electronics. About 25% of Samsung employees, belong to labor unions. And about 21% of these, the union members agreed to go for strike. But you know what? Today, I just read a report that only 350 people attended the strike in the third day after they declared of strike. Because I do believe that, the union members are aware of very unfavorable poll opinions to this strike. And, TSMC, the strongest rival of Samsung Electronics, declared they will go for test production of 2 nano technology, which should be the major products and the production for Samsung Electronics for the next year. So regarding all these issues, I do believe that this strike will not cause such a big chaos, big concerns in the semiconductor industry.
All right, another emerging issue to keep a close eye on. Thank you so much, Professor Yang, for making time for us tonight.
Thank you.
And many thanks to you as well, Dr. Kim, for sharing your valuable insights.
Thank you very much.
And that brings us to the end of the show. Thank you for watching, and we'll be back with more same time next week. Have a great weekend.